Welcome back to the third and final video of the mean reversion algorithm. Before we start, if you would like the completed Jupyter notebook for the mean reversion algorithm, check out intrendias.com blog section where you could, for free, download the Jupyter notebooks after signing up for Intrendias Essentials, which is the free tier for the website. Intrendias Essentials will always be free, so check that out, guys. Thank you. Back to the video. Welcome back to mean reversion strategy in Python. We are going to skip the backtest for now because I think it'll be helpful to visualize the algorithm itself first prior to doing the backtest. So for the algorithm itself, we are going to start off with another Python function here, and we're going to call it mean reversion algorithm. And then it's going to take a couple arguments. First, we're going to pass in ticker, start date. We're going to set the default to past date, and end date. We're going to use the past variables that we created in episode 1 of this series. And then finally, we're going to have a interval, and I'm going to set that as a default of 1 day, meaning we're going to pull Python data that's in terms of one interval. So it's going to be daily stock chart data. So now that we have that, we are going to fetch historical data. So we did this in the second episode just to visualize our brand new EMA, Bollinger Band, and ATR functions. And we're essentially going to pass this Yahoo Finance argument into our custom function. So Yahoo.download. So we're going to scroll all the way back down. And don't forget to add a colon here. That way it'll actually indent. We're going to try to download historic price data using the yfinance yf.download argument. If an exception occurs, then we can use the try and except here, just so that, at least for the user experience, you don't want to crash the algorithm if a ticker was inserted wrong. So we're going to use the try and except method. So the DataFrame is going to be Yahoo Finance.download the ticker, and we're going to pass in these arguments up here into download. So ticker, start date, end date, and interval. Now that we have that, let's say Python was unable to get a good request. Maybe a 404 error occurs and a bad request comes back. So in that case, we're going to say except, and then we can say error. We could do an F string here so that the error message is a bit more dynamic. So we could say ticker could not be found. And let's say the symbol may be incorrect or delisted. Okay. And then the end user can toggle that error. And then we're going to say return error. Okay. So we want this return in the indentation of except. We don't want to return the error when it's successful because that would not make sense. So we have that. And then I would like to get some fast stats about the financial asset that we're searching. So we're going to go all the way back to episode 1 of this series, and we're going to look at the stock quote that we have from our custom getQuote function so that the end user knows what asset they're looking at, what the most recent price was, and what the percent change was as well. So in order to do that, I need to create 3 brand new variables once I call this, which is ticker, quote, and change. So I'm going to scroll all the way back down, and I'm going to say ticker, last price, and last change. Honestly, I really don't need this value here. So what I could do is tell Python, hey, skip this argument. Don't store it in memory. Don't waste your time. And we already have ticker from up here, so it wouldn't really make a lot of sense to gather the ticker again. So I'm going to say ignore it, pass it, don't put it in memory, don't waste your time. Last price, and I'm going to call it last change. And then I could say get quote of the ticker that we search. Okay, so now we're back to the actual fun part, the meat of the algorithm here, where we're going to do some technical analysis. The data frame is the one that we just grabbed in our try statement. Assuming that we are successful, it'll pass right through the accept. It's not going to run it, and we're going to keep trucking with our new data frame. We're going to say create EMA and Bollinger bands. This is the custom function that we built in the second episode. The period is 128 for this example. You can obviously change it however you wish. If there is a period window that you find a lot more compelling to use, definitely let me know. But for now, 128 is a pretty good standard. And then I'm going to say create ATR, data frame of 5. This 5 being the window. Right. So create ATR, period of 5. That's our window. So this argument is correct. So now running this will provide us not only the historical data, but also create the exponential moving averages and Bollinger bands of the period 128 days, and then the calculate average true range with a period of 5. So that is what we want. So that's great. So now we have the technical analysis that we need to assert whether or not the stock may indulge in some mean reversion. So I'm going to call this section buy sell signal logic. And then we're essentially going to create 3 lists, which is a buy signals list. And we're going to create it as an empty list first. We're going to have a signal list, sell signal list, that's empty, and then the action list as well. So we're going to initialize these empty lists to store the buy and sell signals, and the action is going to have a string value of whether or not to buy, sell, or hold. So string values, buy, sell, or hold. So then if we have an action list, then what's the point of a buy signal and a sell signal? The point of these are going to be the numeric, actually a better word is float, the float points of the sell signal on the close chart. So this list is going to essentially tell us where should I put my upfront triangle or downward triangle on the chart so that the user can see, oh, okay, I need to buy or I need to sell, right? So this is going to tell us where to actually put it, and then this is going to log the actual action that we should take within the data frame. So now that we have that squared away, I want to extract the relevant columns for calculation. So I would want to collect the row values of column low. I want to collect the high values from high. And I'm going to do this for close, Bollinger band lower, and Bollinger band upper. And the purpose of this is so that we can iterate through each and every day what the scenario is on that market day, and then whether or not we should buy or sell. So this is going to lead us into performing a for loop to go through each and every trading day. So the data frame of lower band 128, and then Bollinger upper data frame column upper band 128. Okay, so now we're going to do our for loop, which is for I in range. This is the length of the data frame. So we're going to perform that. So for I in range length of data frame, we're going to go through 0 through n, n being the length of the data frame. And now we have the actual column stored in these brand new variables. And we're going to want to create single values so that we can do a true or false statement. Is it true that the closed value is greater than the upper band? Is it true that the closed value is lower than the lower band? And if so, there may be some potential for mean reversion. So I'm going to call my new low value on day I, low val, is equal to low at low I. Same thing for value of high. We'll do high I, close val, same thing, close I, and then Bollinger lower val is equal to Bollinger lower I. Bollinger upper val is equal to Bollinger upper I. Cool. So now we actually have single values on this given day in the data frame. Okay. So now we're going to create some logic to essentially assert whether or not the statement is true or false. So let's say we have a bullish mean reversion, which is the close val, which is less than the Bollinger lower val. So essentially this says if the close value is less than the Bollinger low, then potentially that means the stock has gone way too low and it's due for a correction to the upside. So that's bullish for us if we were to enter a trade there. We're going to do the exact opposite for the bearish scenario. Bearish mean reversion is equal to the close val greater than Bollinger upper val, right? So the close value is way above the upper Bollinger band. The price has skyrocketed a bit too much. It overstayed its welcome, and perhaps that means it's due for a mean reversion to the downside. So that would be a bearish scenario. So now I could say if bullish mean reversion, essentially I'm just saying if true, then perform what's in the index or indentation. So we're going to grab our empty buy signal list and we're going to append or add the new low value. If I have a buy signal, traditionally buy signals are beneath the candle wick, and then for sell signals, it's above the candle wick. So I want to collect the current low value on day I of this for loop. And then I'm going to times it by 0.95 so that the triangle for the buy signal doesn't cover up the candlestick wick, right? So low value times 0.95. This ensures that the buy signal doesn't overlap. Same thing with the sell signal. We're going to grab the empty sell signal list, but this is a bullish mean reversion situation. We want to actually buy into the stock or crypto or whatever. So in this case, I want to pass in a numpy nan, or similar to null, basically saying for this day in I, in this for loop, pass in an NAN and don't store a value there so that a sell signal doesn't pop up on the screen, right? And then finally, the action dot append. We're going to store the text value buy so that we know what we're doing on this day. So now that we have that out of the way, we could do the same thing for the bearish mean reversion scenario. And instead of the buy signal having a value, this one will have np.nan, sell signal.append. Now we're going to use the high value. Traditionally, the sell signal is on top of the candle wicks. So I'm going to say times it by 1.05 just to nudge it a little bit up. And that's the other thing too. You want to do a multiplication here instead of like a hard-coded dollar figure. Because if I were to add $2, it'll it'll be relative to the asset's price, right? Pushing the signal value up $2 is not going to do much for Bitcoin when it's at 42,000 right now, at least December 13th, 2023. Versus if I add $2 to space, which is only $2 a share, right? So I would prefer to multiply it, because if I were to add a hard-coded value, it'll be relative to the asset price and it won't be consistent. So definitely a little footnote there. So now we're going to do action.append, and we're going to do sell. And finally, else. Basically, if our bullish mean scenario isn't true and if our bearish mean scenario isn't true, then we're just going to hold out. If you already have the stock, then hold it. If you don't have the stock, don't buy into it. So both the buy signal and sell signal will be null. So I'm just going to edit this real quick and say sell signal.append is null. And then the action that we'll take will be hold. All right, cool. So now we have 3 brand new lists that were just empty, but now they've been appended through every single day of the data frame in this for loop. And they now have either a buy, sell, or hold action, and they have some values trickling in for buy and sell signal. So now that we have that, we're going to create these lists and turn them into columns in the pandas data frame. So we're going to say buy signal is equal to buy signal. That's the name of the column and the list. We're going to make a new column, call it sell signal. Keep everything simple and just say sell signal. Data frame action is equal to action. So now I can return the entire data frame. The data frame is not only going to have what we requested from Yahoo Finance, but it's also now going to have a bunch of technical analysis and buy sell signal and the action that we should take. So now let's test this out. We're going to do the mean reversion. Data frame is equal to mean reversion. Let's look at Apple. We'll have a start date, which is the past date, the current date, and the interval. Since we already passed in default arguments for these 3, I actually really don't have to do anything here. I could just pass in the ticker argument and be set. So in that case, I'm going to run through all the previous fields so that everything works out. And I spoke too soon. Invalid syntax. There's a weird comma there that I need to get rid of. So let's do that. Now it should be clean. So now the mean reversion algorithm is going to scrape Yahoo Finance, use the request, and we're going to print out the results. And there you go. So we have exponential 128, standard deviation, upper band, lower band, ATR, stop losses, and now buy and sell signals with the action. So for example, boom, most recently, the stock is at 191. Is that right? No, that's the stop loss. Most recently, let's see what the close price was. Around $195 is told to sell. Most recently, that's interesting. There's a sell signal in the most recent trading day, December 13th. All right, so that's really interesting. So most recently, potential bearish mean reversion for Apple. So that's really cool to see. Okay, so now we have the buy signal, sell signal, and action. So now that we have this visual of what these 3 columns look like, I think it'll be a lot more easier to now do the back test. To start off, I want to create a brand new variable that's going to store the initial investment value of the backtest scenario. So in this case, I'm going to say we invested $10,000 into ticker, right? And then I'm going to calculate the bought and held, which is essentially the financial assets performance as the benchmark. Because if the algorithm performs worse compared to the bought and held strategy, then it wouldn't really make much sense to buy and sell. right? Especially with commission fees, taxes, it would just be a lot better for you to just buy and hold, right? So we're going to use this value as our benchmark. The bought and held return is going to be the final value in the brand new bought and held column. So now that we have that, I'm going to extract only one value, which is the very final value of bought and held. So this itself is a bunch of rows of values, and then here we're going to create a new variable to store the final value. And then we can move on, and now instead of the dollar value, I'm now interested in finding the percent value. So I could round the bought and held return minus the initial investment balance over balance. So, y2 minus y1 over y1. And then I could multiply it by 100. And since this is a percentage, I'd rather just round it by 2. So we could close it like that. I also want the bought and held percent sign. This is more so just for readability and user friendliness, right? So I could go back to our previous custom function, which was percent change symbol bought and held percent. And then this will give us either an up arrow or a down arrow. And our bought and held return will be the final dollar value. So I'm going to do some F string, get the dollar sign in there, bought and held return. Also, feel free to, shorten the variable names if you want. I just wanted to make the variable names as cohesive and clear as possible. So I'm just going to copy this guy. I'm going to overwrite that value and return the string version of that. So I'm going to say f string bought and held percent. And I'm going to also want to do another bracket bought and held sign. So I'm just going to copy and paste that directly. So now I could have not only the percent change, but also the up and down arrow, so that I could easily see whether or not the performance was up or down. So this represents our benchmark of we want our mean reversion algorithm to do much better than the bought and held percent change. So next, actually, I also want to make this a new function. So I'm going to call it backtest DataFrame. We're going to pass in the Yahoo Finance data along with the technical analysis that we built. So we want to do a win count, total trades, both equal to 0. And previous action is none. This is to initialize the scoring of our algorithm. And now we're going to actually get into the weeds of back testing the algo performance. So let's say I initialize another list, buy sell returns is equal to an empty list. Stocks held, I'm going to say 0. And we're going to do another for loop. Data frame. Okay, so now we're going to have brand new if statements. If the row action is equivalent to buy, then we're going to see how much money in our balance we have, starting off at 10,000. So, okay, cool. If I have $10,000, then how many full individual stocks can I buy of that stock? Or how many full coins can I buy of that stock, etc. This backtesting function assumes that once the very first buy signal appears, you go all in. And then the inverse, once the very first sell signal appears, you sell all your shares. Okay, so that'll be the most simple backtesting function that we could build. We could in the future do other videos and perhaps do like sell half or sell a quarter or something like that. So the stocks held are going to change because now you're going to buy some shares, add to your stocks held. So stocks held will be equal to the stocks bought plus the existing stocks you hold. So stocks held plus equals stocks bought. And we're going to do the exact same thing for the action sell, except the inverse, right? So now that we're selling, we're going to want to see the balance plus minus the stocks held times the row and close, because I want to see how much the stock is now worth. Add that to my balance of 0 now, and then stocks held turns into 0 because we will sell out of position 100%. Same thing with here. We will use all balance and buy. And then what if the action is to hold, right? What do we do in that scenario? Well, in that scenario, we're just going to pass on this argument. So if we pass, it'll go straight back into the for loop and continue to iterate through the data frame. Now that we have that, we will have buy, sell, return, which is the empty list, and append the balance plus the stocks held, multiply it by the row that we're currently iterating, and I want the close value. And that's going to give a list of our buy sell returns. So now we have a buy sell return. This is going to be a value starting at 10,000 because that was our initial balance, and it's going to fluctuate based on when we buy and when we sell. So to keep things easy, I'm going to give the column the very same name that we gave it in our variable. And through this iteration, we changed the balance, right? Going through this scenario, the balance is now not 10,000. Hopefully it's greater than 10,000 because that means our algorithm is outperforming the bought and held strategy. So for further arithmetic, I'm going to reinstate that the balance is 10,000. And I'm going to gather the buy sell return is equal to the buy sell return dot ilog of -1. So go to the very last value in buy sell return from this list where we said balance plus stocks held times the row close. And hopefully that last value is greater than 10,000. We could also do some more statistics like max drawdown. So this is the deepest trough point of our strategy. So even if we're up, 11% overall, we could have had a max drawdown of 20% during the trading. So we can say, how do we find the max drawdown? We can use the min function to find when was the buy sell return the smallest, right? So if we went from 10,000 to 5 to 12, the minimum would be 5. And that'll be our max drawdown as a dollar figure. The max drawdown percent. So we're going to perform pretty much the same thing that we did up above. We're going to have the round function drawdown minus the balance, since that was the first value, over balance, multiply it by 100, round it by 2 since I want it as a percent, max drawdown percent sign, percent change symbol, max drawdown percent. And then that's going to give me both the percent and the dollar figure. So I'm just going to copy and paste that over so that we can get through the statistics a little faster. Now I want to see the performance of the algorithm itself, which is going to be derived from our buy sell percent return. So this is our percent return. Again, we're going to use that rounding figure. And we're going to paste it in there. Same thing, use the round. And then I also want the buy and sell percent sign so that I know whether or not it went up or down. And then the buy and sell return is the percent and sign. So now I have all these statistics, right? I have max drawdown, I have buy, sell, return. I want to return all those values. So I want the data frame to do further analysis. I want to do the bought and held return. I want to know what the bought and held percent is. I want to know the buy, sell return. I want to know the buy, sell return percent and the max drawdown percent. So I'm going to return all these stats when we run our mean reversion algorithm. I also have an error here. I need to say equivalence, and now the function seems to not have errors, so that's good. So now that our backtesting function works, we're going to go back to our algorithm for buy and sell signals. Our data frame does come up with these brand new action items. However, we now need to see visually and in terms of numerical figures whether or not these buy and sell signals have validity. So when we go back to our buy sell signals, I want to gather these values from the backtesting that we created, the backtest function. So I'm just going to say backtest data frame, right? So if I run this, it's going to give me an error, which is very upsetting. Invalid format specifier. Okay. Interesting. So let's see what that error is. It might be because of that space that I have between the decimal and I wonder if that's it. Yeah, maybe it's here. Okay, cool. I'm not getting that error, so that seems to be the case. Cool. Moving on. So I could get the data frame like previously, right? I have not only the buy signals, the sell signals, and the action, but now I have the bought and held versus the buy, sell, return, right? So we both start off with $10,000, and the algorithm tells me to continue holding on my 10,000. So me in the backtest, I'm not going to buy. So I'm going to stick with my $10,000. But this shows how Apple is performing on $10,000. So it's going to continue changing based on the close price. Finally, we see that some buying and selling was happening, and we're now up to $13,700. However, Apple is up $15,000. So in this scenario, Apple may not be the best stock to perform the mean reversion on because we're seeing that 13 is less than 15. The bought and held strategy would have been better. But now let's look at Delta. So Delta is a good example for the mean reversion algorithm because here we both start at 10,000, but the end result is a lot different. We're at $18,700 in the back test if you use the mean reversion technique in this trading strategy versus you're only up a mere $600 if you bought and held Delta. So definitely some potential for Delta here. And if I wanted to see what the bought and held value is, then cool, I could just print it. And it's the exact number we just saw in the data frame, the mere $600, 10,600. So this seems to be working. If I'm curious, I'm like, okay, I could have made $18,000, but what is the risk that I would have been incurring? What's my max drawdown? So here it says my max drawdown was near 18%. So some good stats to have. What's that in the dollar figure? The dollar figure is $8,242. So we have our hands on a bunch of helpful statistics so that we could better take action on these buy and sell signals, see if they have any validity or not. So now that we have that squared away, we can continue with the mean reversion algorithm. Did we perform a start? We did not. Okay, so what I personally like to do is to time how long my algorithms take for performance. So up here prior to try, at the very beginning of the algorithm, I'm going to say start time is equal to time.time. So it's going to take the time of the local computer and figure out what time it is so that we could measure how long our algorithm takes. Okay, and then we need these guys indented. And then I could say end time is equal to time.time. So I could actually print the end time. End time is not defined. Oh, right. Yeah. So I gotta delete that. I gotta unindent these because the function's up here. So I actually want to say that. See if that works. End time is not defined because it is not part of the function. So instead, I'm just going to say print end time so that I could show it to you guys quickly. See if that works. Okay. So then now we could see how long it takes. I want to say this is in milliseconds. Because yeah, if you want to see the execution time, then we will have to convert it round the end times so that it becomes seconds. So if I did that, that's a lot more legible. So it took around 2 seconds to outperform Delta stock, right? So pretty powerful stuff, you know. So this algorithm seems to be working pretty well for certain stocks. So finally, in Trendias.com, I have kind of like a data table that shows off these statistics. So what I would like to do is make that data frame with you. So I'm going to call it DataFrame stats. And we're going to create a data frame where we have F string ticker, colon, ticker, just pass that in straight through. And then the last price will be equal to the last price. This is all from the quote so far. Last percent change, which is last change. You can assume initial investment. And I could either callback balance, or I could just say $10,000. So I'm just going to do that. Say $10,000. And then F string again. I'm going to say ticker performance. This is essentially our back testing, or excuse me, not back testing. This is our benchmark performance to see whether or not the asset performed better if we were to just bought and held. So I'm going to run that in. So essentially it's just gathering up these values, right? So to speed things up, I'm just going to copy and paste the final lines. Here we have the percent performance. Then this is the mean reversion. So instead of in Trendy, I'll just call it mean reversion so that we know what we're talking about. Do the same thing there. So here's the mean reversion percent performance so that we could quickly compare bought and held and the algorithm. Then I'll say DataFrame stats is equal to pandas.DataFrame df stats. So we just created this dictionary, turned it into a data frame. We're going to say stats is equal to DataFrame stats dot t. We're going to transpose it so that it's a lot more legible. We're going to reset the index to make a brand new column. So I'll say stats again dot reset index DataFrame stats. See how many times I could say DataFrame stats. Column is equal to 0 and say data. So this is going to be our headers. And I want the index to say info. So this is what the info column would house, and this is our data. So now that we have that down, I want to return the data frame and the data frame stats. Okay. And before I could gather these values, I need to make sure that this backtest function is within the mean reversion algorithm. So I am going to paste this here so that we accurately derive these values within the function to then paste here. So I'm going to get rid of this down here because that's unnecessary. Now that we have two returning data frames, I will add data frame stats to the mean reversion delta. And now we could finally see what stats looks like. Okay, and here's our data frame stats. And I misspoke earlier. The info index, since it's the index, it's going to be on the very left. Data header is the actual numeric values. So my mistake there. Info, then data. And then we could see the last percent change based on today's close and the previous close. Last price was at $41. If you just bought and held, you'd be up $600. If you were using the mean reversion algorithm, you'd be up $8,000, totaling $10,000 plus $8,000 there. Mean reversion performance, you're almost up 90% on the stock compared to just 6% if you bought and held. The algorithm speed is 1.43 seconds. And we could also do this on other stocks. Check out utilities, Edison utility, which is out in California. The stock is only up 17%, but with mean reversion, you could have potentially been up 46%. So we see some pretty valuable results here. Let's check out Tesla, right? Sometimes, okay, wow, yeah, okay, 110%. Wow. I wish I had this algorithm built out. Yeah, so you could have been up 100%. You could have 2x your money when the stock itself is down 1.6%, right? So super cool stuff. But I also want to show you scenarios where it doesn't work, right? Because check this out. It always doesn't work, right? So that's why it's important to have these transparent statistics so that we could make better judgments, right? So, for example, Bank of America is up almost 7%, but with mean reversion, you'd actually be down 16% with a max drawdown of 34%. So sometimes it doesn't work. So if we see this backtest, we could make better decisions and say, okay, Bank of America, perhaps it's not a good fit for this algorithm. And we take not just a pinch of salt, but a heavy douse of salt when we see a buy signal or a sell signal in Bank of America, right? So very important to have transparent statistics. So we now have the data frame, and we now have the data frame stats, and we now know the performance of the mean reversion algorithm. But we also want to look at it, right? So that we know exactly when to buy and when to sell. So in the next section, we're going to get into the charts. Now we're in the home stretch. We're going to do a final function called chart from mean reversion, taking into consideration the arguments that we have been passing through using the mean reversion algorithm. We're going to call this gather the data frame along with the stats. And we're going to start building some Matplotlib charts to see how successful we are. So to start off, we're going to do figure and ax. Essentially, figure is the new figure, fig, and then ax is going to be the subplot. We're going to give it a specific size so that we could have the chart be a lot larger compared to the default size to make it easier to see. So fig size is equal to 20 to 6. So it's going to be length then width, so or height. Okay, so now we have that. We're going to get the candlestick chart in there. So for the first subplot, we'll say ax plot data frame index, which is also the day or date. Data frame column open, label is equal to open, and I'm just going to do the color black. And then the line style, I will go ahead and do dashed. Line width is 1, so and we could also do the same for close. If you just wanted a line chart, you could also probably just get away with doing the close and not have to worry about the open or high and low, but I'm just going to input that there for now. And then the scatter plot. So you're going to have the candlestick chart in the background. In the forefront, you're going to have a scatter plot, which is the buy and sell signals that are triangles. So we have a buy signal, which is going to be from the data frame action, which is equivalent to buy. So we're going to filter out all the values in action and only retrieve a data frame that houses rows with action equal to buy. Then have a scatter chart where we have our buy signals dot index, buy signals low, multiply that by the 0.95, and even better, because we actually did create that value. So I could actually probably go in here and just say, instead of having to do that arithmetic again, just say, give me the buy signal value, which is a numeric value. And then I'll say marker using the small caret. And then the color will be green. And we'll go label it as label buy signal. Okay, close the parentheses of that scatter arguments. And we're going to do the same exact thing for the sell signals, except we now want to say pretty much the inverse. So we'll walk it through. Sell signals is action is equal to sell. Instead of doing this arithmetic, we can actually just say sell signal, since that is a numeric value. Marker V for the down triangle and we'll color it red. Okay, and then setting labels, subplot set X label is date, subplot set Y label as the price. I didn't mean to press enter, but we do have an invalid syntax. Okay, so that's because of the equal, so good. Ax dot set title to mean reversion strategy. Okay. Ax dot legend, and then that'll just essentially display the legend so that we know what line does what and what triangle tells me what. So then we'll do another chart and PL plot subplots again. We'll do fig size is equal to 26. And then we're essentially just going to have two line charts here where the plot is bought and held, and this is our benchmark, so I'll color it gray. We'll do a DataFrame index, which is the date, buy and sell return. This is the mean reversion, and this is colored in blue. And then finally, we could set a title. So we could call it performance of the ticker between past and current. We could set the X and Y label to date and price, and then show the legend, and then plt.show. And ensure that all this is indented. It is good. And then we'll run that. Seems like there's no errors. And then finally, we could go back in and say, call the new argument or function chart from mean reversion down here. We'll say ticker is delta, the start date is past, end date is current, interval is 1. Okay, so that was weird. Anyway, we have buy and sell signals for the mean reversion strategy on delta. You could see your buy and sell signals along with the backtesting results of your brand new mean reversion algorithm. So looks pretty good. We could look at any stock we want. We could look at American Electric Power, a lot of buy signals recently. It's been doing pretty good, outperforming the stock itself. You could even look at crypto if you wanted, Bitcoin, USD. And you could see a really great return here, actually. You could see great buy signals. I believe this is when FTX fell and, crypto was having a harsh winter. But holding out all the way until end of 2023, you'd be at a great return there. So definitely a good mean reversion right there. Good performance, outperforming the coin itself. So I hope you guys enjoyed this series, this coding series with me. You now have a mean reversion algorithm with buy and sell signals along with backtesting. So super fun stuff. If you do want the full Jupyter notebook that's fully complete, it is available on my blogs page. Free to download the Jupyter notebook right there for free. Let me know what other algorithms you'd love to see. I would definitely love to continue doing these. It seems like you guys enjoyed the first episode, so I thank you guys a lot. And also, big news, we are above 100 subscribers, so thank you guys so much for subscribing to the channel. I'm glad you guys enjoy the content. And let me know down in the comments what's good, what's not good, what can I improve on. Definitely would love the feedback. And thank you guys for watching and coding with me, and I will see you guys in the next one.